All right. Let's go. Welcome to Forex.Today, y'all. On a crisp morning in Atlanta, Georgia. Got a frost warning on my pool. It's in frost mode. What? Yeah, pretty amazing. So anyways, hey, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning trades and not the delusion of getting rich quick. Simple enough. So let me know how it can help. Been doing this a long time, and I'm here to share, so take advantage of that. This is free. Well, actually, it's not quite free. It just doesn't cost you money. It does come with some obligations. One, subscribe to the community. Two, treat your fellow currency traders in the chat with dignity and respect. And three, visit tradersway.com and open up a demo account. Give them an opportunity to earn your loyalty and respect. Hope's trading oil off 82. Nice! Hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Oh, thank you, Maida. All right, so let's take a look around the world. The Japanese yen is, fairly weak. The dollar is trying to regain its strength. Apparently, there's still inflation in the UK, and it's been trading like everything's been fixed. And then you're like, wait, nothing's been fixed. Anyway, so pound is a bit weak. Aussie's trying its recovery. Kiwi's trying to recover. Euro's giving back. Just still smells like sideways market action on the longer term. So be careful. Be careful. Be careful. So why don't we start with gold, oil, and Bitcoin, and then we'll do dollar pairs and yen pairs. Does that smell like a plan? Okay, my oh my WTI. Let's start there, bottom right hand corner. If you recall, what we've planned many, many days ago was a plan B type trade down here. And so now what you're trying to do is observe something like a double bottom, a higher high, get above the moving average, buy a higher low, and then ride the moving average upward. Okay, that makes sense. That's the plan B that we identified when we were way up here. Now, the White House will announce later today an additional contribution of oil to the market from the Strategic Petroleum Reserve, which will get us to an entire 200 million barrels that we've drawn down the Strategic Petroleum Reserve. 200 million barrels. And you're like, well, it lowers oil prices, right? Makes it cheaper to buy gas at the pump. Well, 200 million barrels is what the government has given the market. Okay? Times the price. What's the average price? It was 120, then it was 80. At $100 a barrel. Can you see the cost? Oh, it wasn't free. Remember that. $200 million barrels dumped on the market at a cost of $100 a barrel. That's expensive, my friend. So don't be shocked if you have cheaper gasoline at the pump but higher taxes. So anyway, so this is where we are now. We're trying to see, is there a bottom forming? What we're looking at now is like, I would look at that. I would look at that. Oh, come on now. Gee whiz, come on, dude. There we go. So when you add up the fractals, seems like there's resistance there. Hua. It'll be much more interesting to a bull if we can get above that resistance. Okay. So that's what I'm watching for. So if you recall yesterday's discussion, I talked about if ... plus ... then. Okay, ... And so we might have the if, but we don't have the plus. Cool. Taking a look at gold. Gold still just falling. It's beautiful. Just beautiful. Matrix says, just remember the 85 price. I mean, you might never see that again, huh? Well, my concern is that they keep drawing down the Strategic Petroleum Reserve. Okay? Oh, thank you, Hope. My concern is going into the election year and really up until the end of this year, we draw down the Strategic Petroleum Reserve. Inevitably just delaying what needs to happen. Prices need to go up. So when we get to the point where we're through the election and into a new year, well, if we stop dwindling down the Strategic Petroleum Reserve, one would expect prices to go high. But at some point, the government should refill what they took out, replenish what they withdrew, which is strange because then the government is going and being a buyer in a market that's short of supply. So the government would then be pushing up prices at the same time prices are going up. Or they simply don't refill the Strategic Petroleum Reserve. Okay. Well, that's a political decision. But anywho, this is gold continuing its fall. This is indicative of continued risk off. And it's falling beautifully. I mean, what can I say? Can I say? I mean, I've set it up every day. Now it's moving to the downside. So now it's happened. Yeah. Yep. So that's that. That's cool. So that's working out really nice. Even through that consolidation and the craziness and of various random things going in the market, headlines, the fundamentals remained, and this logically has been falling. Cool. Richard says it hardly moved, and that's how retailers get caught. Yeah, institutional investors sold it, and has walked away. Like, imagine, the average retail person probably has what, a $10 stop on gold. What if you had a $250 stop? Well, then what you're saying is, I'm only going to make one trade, and it's to the downside. Okay? And you're going to ride this out for the long term. Okay? Matrix says $50, so that's equivalent to 500 US dollars. Okay? But imagine someone was bearish up in here and took the double top of a double top, and their stop was way up here, way above the high. Okay? So this is, by the way, R1. By definition, it is resistance. So they sold at resistance, double top of a double top. And I was just doing this, and those traders are not really that worried anymore. They've long since maybe moved their stop to break even. And all of this is sort of irrelevant. It's just built into the trade. Okay, what a trader is saying here is that the Fed is raising interest rates to lower inflation. Okay, which is lowering inflation is dollar strength. Lowering inflation is gold weakness. And right now, the market is still debating, is the Fed going to go to 4.5 or 4 3/4? Because we know what the dot plot is saying is 4.6. Of course, that's an average. So, right? But what people forget is that's what they were discussing a month or so ago, a month and a half ago. So in my books, I think it's going to go to 5 to maybe 5 1/4. So as long as we're still debating 4.5, 4 3/4, 5, 5 1/4, 5.5, this comes down. In my humble opinion. Taking a look at Bitcoin. Okay. Still looks predominantly down. Doesn't tell me if we can make a lower low. It just tells me not risk on, which is strange, right? Because the stock market has been trying to go up. And yet Bitcoin is still risk off. I'm going to move my stop to break even. I'm just tired of staring at it. There we go. Oh, good, Marina. That's great. David says, Wayne, do you prefer entering on a break of a level or a retest? I do not like trading breaks. I think it's the wrong way to trade. Okay. Why? Okay, let's do it this way. We'll make that resistance. We'll make that support. Okay, support, resistance. So if you trade a break, you just bought high. I don't buy high. Okay? If someone else does this and trades a break below support, well, now you're selling low. I don't sell low. Okay? Now, I know that's taught 20 years ago when I started FX Bootcamp, or 18 years ago when I started FX Bootcamp. That's what was being taught by, when this was back in the day when you would go to a hotel, conference room over a weekend. And you'd take some weekend course and some guru would tell you how to trade. That was the prevailing logic back then, that you sell below support and you buy above resistance. And of course, that's never worked in the history of time, except for people that are selling courses. Because it makes sense. Oh my God, that totally makes sense. If you don't know what you're doing. So I do something different. I say you have to have some logic. Okay? So if you're a bull, you buy at the bottom, or you let it break out and then you buy at that bottom. And I taught myself how to trade, as you guys know. We discussed it yesterday. And I remember going through the process of learning the truth. Remember, veritas, the truth. I learned the truth from kind of learning that if I bought here, it would go up a little bit and then come back and I'd lose money. So I just, through observation, recognized that I don't trade breakouts. Okay, I get a breakout, and then I'd let it fall. Okay, and then I would buy it. So that's how I taught myself how to trade. Nobody taught it to me. There was no course. There was no book. No nothing. That's what I figured out through pain and suffering. Yeah. And as Matrix says, scientific methodology for analysis of, I looked at a lot of the trades. I analyzed my trades. I spent more time analyzing my trades than trading. But then I realized, okay, this is important, but this is where I traded. Okay? So, boom, higher high. So I'm set up to buy higher low. Okay? Role reversal. What used to be resistance is now support. And then you might say, well, Wayne, that's just Elliott wave or something. And I'm like, well, I didn't know anything about Elliott wave. So maybe it's not Elliott wave. Maybe Mr. Wave is copying me. I don't know. But I was there when I figured it out. Mr. Wave wasn't hanging out in my home office in California. So anyway, so that's just, once again, it's not confirming, nor is it really denying my base case here, which will be continued dollar strength based on continued economic risk. Okay, so anyways, I hope that answers your question, David. Okay, so that was gold, oil, and Bitcoin. Let's do dollar pairs and yen pairs. Yeah. Yeah, boy. Okay. Currently, Aussie is trapped, rolling over, giving you permission if you want to engage this way. It's a little bit risky. It's a little, okay, but maybe worthy of a shot. Oh, thank you, Hope. Yeah, they put together a budget for publication and PR, and it was about $100,000. And the interesting thing about a book is you'd be lucky. Like nobody makes $100,000 on selling a book. Okay. I think it's something like 99% of book authors sell less than 1,000 books, right? So if you added it up, you're like, wait, right? Wait, the average person wouldn't be able to do that. So anyways, so I get what they're doing and it makes sense, but am I going to do it? I don't know. Yeah, Matrix says even the best sellers. Yeah. So I don't know. I don't think they're wrong. Could you trim that down a bit? Yeah, you could, but you know, I get what they're doing. It makes sense. It comes down to who they know. So, for example, if a firm says, well, we'll send out a whole bunch of press releases. Well, I can do that for pretty cheap. Okay. But back in the day, I was paying something like $25,000 a month to a PR firm to do some PR. And in front of me, they just picked up the phone and called Bloomberg. No press release. I mean, we sent out press releases, but they just picked up the phone, called Bloomberg. They picked up the phone, they called Fox Business. They picked up the phone, called CNBC. Boom. There you go. So would I pay $10,000 for a firm to send out press releases? No. Would I pay $25,000 for a firm to pick up the phone and call a producer at Bloomberg? Yeah. So it really depends, right? Of the value that, let's say, a publicist would provide. Now, if they want to be a publisher and a publicist, yeah, well, and Matrix says pay for your own advertising. I could. You know, I could. Okay, so anyways. Oh, thank you, Hope. I appreciate that. All right, so anyways, there you go. It's just kind of set up. Remember, the predominant move, like let's say the short-term market conditions are like this. Okay? And the longer-term market conditions are this. So for now, my thought process is sometime in the future it'll do this. But I could be wrong. I could be wrong. And right now I'm spending more time being concerned about, maturity of the trend. And as you know, back in January, I said their money, like, let me see if I can say it in English. Back in January, when I did the month-by-month outlook for the year, so literally talking about January is going to do this, February is going to do this. So when I said October, back in January, I said October, the markets are going to be bearish. They're almost always bullish, but not this year, they're going to be bearish. And then I said a few weeks, 2 or 3 weeks before the election, money is going to come out of the market because of the event risk around the political election. And then I think there'll be like a sort of, dare I call it, a Santa Claus rally from the middle of November to the middle of December. Probably a false rally, but rally nonetheless. Can anybody back me up on that? That October is going to be down, even though it's almost always up. And then 2 or 3 weeks before the election, money will come out of the market because of the risk event. Then the risk event will happen, and then we'll have a false rally simply based on relief. It's only a relief rally. Oh my God, nothing's going to change. Nothing radical is going to happen. Okay? Thank you. And so now we're in that period in which we're losing volume and volatility. Things are, not everything, but many things are consolidating. And like, look at the daily chart here on the pig dog. Okay? You're like, Wayne, well, what volume and volatility? Well, they're still compared to historic norms, but we had this massive clearing of the market. Okay? A huge down, a historic rise. And now, right? Now we have a lower high and a higher low. And we're kind of, mom's spaghetti. Now we're kind of like, meh, 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 meh. And maybe that's what I'm talking about. Okay? Or going to like this Aussie dollar. I've been selling it and selling it and selling it and selling it and selling it. And now it's like, meh, 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 meh. Okay? This is just people no longer selling it. Does it mean they're buying it? No, it does not. And even if this goes up, it doesn't mean people are buying it. That's one of the last hammers to fall for an amateur. Amateurs think it's all bulls buying and all bears selling. Nope. Okay? Okay? What about yen pairs? Well, what are you saying on your channel? I've been doing the bond math on the yen pairs and explaining balance sheet rotation on those. I'm going to mark the psych level just because it's a psych level. Nope. Okay. I've been caught up in my job, didn't see what's going on. But now I know I'm better trading on my own. By the way, if you guys want some real inside information, that's not a Justin Bieber song. That was written by Ed Sheeran. Well, I think there's a lot going on here. Obviously, there's a flow or a move of capital outside of Japan. And with quantitative and qualitative easing policies, as stated by the Bank of Japan, through their yield curve control. Okay? They can come up and change things. They can. But just be clear, the reason I hesitate and kind of push back, people that have seen your channel have told me you sound a lot like me, tell a lot of stories that sound like my stories, and have a methodology that seems, well, precisely like mine. So there's a bit of hesitation when you ask a question. Just, I hope you understand. But all the power to you, my friend. But maybe I don't know because I haven't attended your live streams or anyone's really. But so if I got that wrong, then I'll apologize up front. But that's the word on the street. Okay, so anyways, taking a look here, let's go further out. Okay. So despite, like, let's say if you ignore fundamentals and you just look at technicals, what does the chart say? Well, this is what I drew, what was it, 3 weeks ago? You guys see it? Here. You know what, let me do it in kind of the same color. It's that pinkish color. Can you see it? I drew it 3 weeks ago, up to this level, down, and then up to that level. So now time has gone by, and remember, the reason it's so squeezed in there is there wasn't any room because we were actually doing this analysis last month. Okay? So that's kind of where we are now. Did it go up to here? No, it did not. It only went up to here. Then it pulled back. And now it's up here, and it seems to me we're riding the daily 5 EMA, which is an aggressive technical move. Okay? So it's moving nicely. We're in a profit-taking zone for the week. So even if it doesn't fall, it's still what it's like. When I look at this on a weekly basis, it doesn't necessarily mean this. It means the probability of that is increased. So there is a threat to your bullish trade. Okay? So nonetheless, the way I look at this is kind of like up, sideways. Okay? And then maybe up. to the next level, right? Of course, this can go to R3 this week. Okay. So let's take the most explosive move here that we go right through this week's projected top and goes to R3. Okay. That would lead to all kinds of crazy resistance. Okay. But the Bank of Japan has so far no power, and they have not used them. Well, they did intervene. They did. They did. That. Let me highlight this. This was the Bank of Japan. They acknowledged it. It's on their website. So when that occurred, it was either here, the day trading group, or the swing trading group. I can't remember. I apologize. But I broke it down to exactly how they manage this on their balance sheet, but also why they would want to do it. Then I explained how they would do it. And then I explained the impact on their balance sheet. And then I went over something like 20 years of central banking intervention history, including the Bank of Japan and the Bank of New Zealand, and then explained my, 6 experiences with central bank intervention, and explained that this is what typically happens, if not always. I think I said always. I think I said it never has worked. But I did it while those red candles were forming. I did that while the central bank was intervening. I explained why, how, the history, and the mechanics. Cool. And then my experience. Cool. So I would argue that they did intervene. Okay. And you can see they do have power. That is a legit move in an 8-hour period. That is legit. But this ain't my first rodeo either. So anywho, should we worry about 150? Well, if you believe it's a psychological level, then that's what it's there for, right? Yeah, could the central bank intervene another time? Almost certainly. Will they do it at 150? I don't know about that. It's a black swan event. Okay? If you live in California, you can worry about earthquakes. But if you never get out of bed, you got a problem. I lived in Northern California for 20 years. I got there 1990, not long after the October 17th, 1989 earthquake. So it was, let's say 6 months after that earthquake. Every once in a while you get an earthquake. I remember, I'd wake up and I'm like, what's going on? And my bed is shaking like this. You're like, oh, you don't really know. You put your feet on the ground and you realize, oh, the ground is moving. And so that particular one was interesting, where I remember the bed, it was moving sideways. So the earth is doing this. And then all of a sudden the earth went boom. So vertical, boom, boom, boom. And then went back to just shake, shake, shake. Very, very quiet. Shake, shake, shake. You're like, what's going on? And so over the 20 years I lived there, there was maybe let's just say I've experienced more central bank intervention than earthquakes. Okay. So anyways, yeah, that is a big question. What about the ends at 150? Yeah, I don't typically play in New York. I typically move stops in New York. I typically take profit in New York. So really it comes down to let's see what happens tomorrow, eh? Okay, when I look at this chart, what the chart tells me, so again, I'm only doing technical analysis. The chart doesn't know anything about a central bank intervention. Okay, fine. And it doesn't have psychology, so it doesn't have a psychological issue with 150. This chart, when I read it, says if it hits this price today, it's going to want to come down. If it hits on Thursday or Friday, it'll come down a bit and then go up next week. That's what it says. What will it do? I don't know. Maybe we never get through R1. Do you notice that I have it marked already? Okay. But remember, I buy dips. You guys ever seen those houses? The signs by the side of the road, like we buy houses. We buy ugly houses. Maybe I'll get a t-shirt that says, I buy dips. So anyways, that's a pretty chart for sure. Pretty chart. So yeah, I'll tell you this though. If the Central Bank of Japan intervenes with the USD yen, dollar's going to weaken. Okay. Denise says it was the swing session on the September 22nd where you explained in great detail. Oh, thank you for that. And that was there. That was that day. Yeah. So, I guess the value of a coach in this situation is that I can very calmly go through the math and the business logic, the central banking policy is understood, right? So instead of looking it up or reading someone else's blog post, I could sit there and say, okay, this is happening. Don't panic. Let me break it down into digestible pieces. You've never been through this before. I've been through it many times, so let me take you through it. Let me walk you through the logic and the impact and the history, and just so you know, and what is likely to occur from this. Is it the end of the world? No. All right. Okay. So right now, as you probably all know, I'm looking for dollar strength. I want pound dollar to come down. All we've done is test the 50%. Okay. And now we're closing the gap between the 5-8 on the daily. This looks interesting to me. Okay. Going out to euro dollar. Okay. This is that counter trend trade. Okay. You hit it on a Tuesday. Comes back to the central pivot. Well, is that righty? Yeah. Okay. Consolidation, moving from the resistance to the support. Obviously, I've explained that a couple of times. Kiwi dollar. This is one I'm showing as well, is bearish to down. But maybe not now. We have the daily. Okay, remember this? Taught you guys how to scalp that. Okay, there's the daily, but look what's propping us up. One of them's going to win. One of them's going to win. And you say to me, which one? And I'm like, well, that's your frickin' job. It's true, though. Because I might be your client. And I'm like, hey, which one? You're like, I don't know. What do you think? I think I don't need to pay you money. Okay? So it's got to be your job. You're like, wow, that's serious technical. That's a serious technical support. So we need to manage that risk to our bearishness. But I will continue to sell rallies until that support is confirmed. And in that case, I'll go to neutral. Wicked smart, huh? Wicked smart. My mama don't like you, and she likes everyone. Do, 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 do. So anywho, neutral in capitulation. Is that, yeah. You know, it's like, I don't know, cash is a position, right? So I already pointed this out to you guys yesterday, if you recall. We dropped into the daily, and I showed you how to scalp this. Sweet. Where you been, Maddie? Gone back to exotic dancing for a while? Chasing your passion? Hey, I get you. Me too. So anyway, yeah, look, I'm hoping these markets roll over. We'll see. I see there are true threats. I do believe money's going to come out of the market before we roll into election season. And then from there could be a counter trend, right? So I'm super ready to be wrong, especially when you see things like I'm a bear on Kiwi dollar. I've been a bear for a very long time, but all of a sudden we're on a 2020 low. Will that be important? Yeah, probably. Okay. Same thing. Aussie. Yeah, okay. Yeah, it's been falling, consolidating. But then am I worried about central bank intervention from the Bank of Japan that would push Aussie dollar up? Yeah, you know what? I need to be worried about such things. There's right, but not frozen in fear. Should I worry about the elections coming up? Yeah. Those are the things that I need to be worried about. I'm not paying attention to my MACD, okay, so much as I'm thinking forward and recognizing that the past is the past. So this has been fine. Now, I have fundamentals that also help me make decisions. Okay? And so I am still a bear, but I have to have a kill switch. Okay? Right now, it's game on to the downside, but I don't have super conviction because of all those other worries. So as long as we're below that, I can be selling this. Okay, I have a feeling we're going to do one of these things. And I'm even worried about that, even higher, you know. So I'm ready to be wrong, but I haven't switched teams. Yeah, I got you, Maddie. That's good. Got married. Nice. Okay, remember, put the toilet seat down. No, not really. Not really, Frankie. Not really. So you know what? I'm going to bounce. Okay, like the cow said, I gotta moo. I'll give you the juice. I gotta moo. I gotta moo. I'll give you the juice. Did the cow really say that? No, the cow says, Murr. Okay, so anyways, hey, love you, babe. This was real. Gotta jump. Peace on earth. May the pips be with you. May your profits be above average. I hope you have a wonderful day. It's Wednesday. Don't forget oil inventories. Biden's going to make the announcement today. Sorry, President Biden is going to make the announcement today about, another increase in the drawdown. I don't know, positive, negative, or negative. Well, yeah, positive, negative. So the announcement will be even larger drawdown. And like I said, we're approaching 200 million barrels. Well, dude, if we only had 500 million, 200 million is a lot, especially in a time of war. So interesting, right? And by the way, a big shout out to Brian Bray, member of the day trading and swing trading community. He sent me this great article about the SPR. They're actually a series of 2 or 3 caves. Now, the caves were salt domes, which is interesting because in many places in the world, you'll find oil near salt domes because it's the way that the domes form that it kind of catches the oil. And so literally when the British and the Americans were going through the Persian Gulf looking for oil the first time, they didn't even get off the ship. They were just staring out at the sand dunes from the ship, and by the shape and the geology of the land, and of course this is something covered in the oil trading course, we actually do geology, but they could see the salt domes covered in sand, of course, but they're like, oh, there's going to be oil right there. So anyway, so it's kind of an interesting thing that there's these salt domes that were in a couple of places in the United States, and what the Americans did was pump water down into the salt domes to saturate and dissolve the salt. Then they sucked the salt water out and pumped it into the Gulf of Mexico and replaced it with crude oil. Isn't that interesting? I thought that, I'm like, oh, no kidding. Hey, when that thing is drained, right? When Joe Biden drains that all the way to the bottom. Wouldn't it be cool to go spelunking? Like, how big is that hole in the ground? You're like, I don't know, about 500 million barrels. Well, hey, man, a barrel of oil is pretty big, right? That'd be like crazy. That would be crazy. Now, I've only gone spelunking once or twice, and I tell you, that's pretty crazy stuff. I'll leave you with one thought. I was in one underground chamber, and I was going to crawl through a hole and get to the other chamber. And it's pitch black, right? Like, right? It's absolutely totally pitch black. So I get on my belly, and there's about an inch of water, so that kind of sucks, right? And because you're hiking underground, you don't want to be wet. But anyway, so I'm underground. I laid down on my belly to get in the water, and I'm going through the hole, right? And the top of the cave gets caught on my backpack. And I'm like, snap. So I have to scooch back, take my backpack off, and slide it through the hole so I could fit between the floor of the cave and the roof of the cave. How does that sound? Now, the most amazing thing happened next. I scooch back through the inch of water, blip, 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 and I come out the other side of the hole. And it was about a body's length, this hole. And I get to the other side, and I turn on my flashlight to see what I just walked into, right? I'm like, whoa. And I turn and nothing happened with my flashlight. I turn it on, and I'm like, oh, what a time for your flashlight to break. Oh my God, I'm underground. I just got in this chamber and it doesn't work. And then I shine the flashlight in my face, and it's bright as all heck. So what happened was I got to the other side into the new chamber, and it was so big that the light of the flashlight couldn't hit the other side of the cave. And then I pointed it up. It didn't hit anything on the other side of the cave. I'm kind of going left, right, up, and down. And my assumption is the flashlight's not working, but it's on. It's just the new room is so big that the flashlight was worthless. I had to shine it to the ground. Otherwise, it was just absolute total pitch black. Isn't that scary? And you're like, how many times do you want to go spelunking? And then you have to ask yourself, well, why is it so big? Well, if it rains, that's going to be full of water. Think about what carved that. Uh-huh. And it could rain 100 miles away, and you're going to be in trouble. Yeah? So anyways. Huh? Yeah. So imagine kind of dropping down into a cavern, an old salt mine dissolved away. Boy, that'd be something else. Go see that. But yeah, well, maybe I'll leave that for the young guys, huh? I'll leave that for the young bucks. That's called living unless you drown to death. If you drown, that's called dying. So anyways, love you, babe. That was real. Peace on earth. May the pips be with you.